Hey, what's up, everybody? This is Omar from the Bullish Bears team, and I wanted to do a quick video today about short selling and like my strategy. And I think that I'm just gonna become a short seller. I think at some point I think I'm gonna stop even. Obviously I'll trade up. Patterns that break out. But I think I'm gonna decrease that and just start focusing more on short selling because short selling I feel like is a winning strategy. And what I'm noticing is um, the real successful traders like the Tim Grittanis, Modern Rock, you can find them on Twitter. Those kind of guys, that's what they do. Cameron Fools, they just short sell. They barely ever go long on stocks because short selling is a lot simpler, I think, than going long, especially on these small cap companies. And what's short selling? So short selling is basically borrowing shares from your broker because you think the price of the stock is going to go down. And what you do is you place a short order, right? For the amount of shares that you want to short the stock at a certain price, and then you buy the cover when you want to close it. So you're borrowing the shares at one price, and then you're actually purchasing them at another price. So you hopefully purchase them high and sell them low, or borrow them high and sell them low for a profit. And and what I do is, basically what I do is I have this strategy sort of mapped out. So what I do is, you guys all know that watch my video, and I think I went to this with you guys in the video, right? Is what I look for when I make a trade, right? I look for patterns, right? So I look for stocks that are breaking out, making new daily, weekly, monthly, daily highs, and breakdowns, stocks that are making new daily, weekly, monthly, yearly lows, dip buys, buying a stock after major sell off, red to green plays and green to red plays. So really what I'm focusing on now is when I'm short selling is I'm focusing on red to green plays, and I'm looking for stocks that gap up like 50, 100% in minutes, and then short into the sell off. That's the strategy that I'm doing right now. And basically, remember what I talked about, like how do I find my plays? I showed you guys, right? I set up a watch list, and what I do is I set up a criteria for stocks that finish higher than 7% of the opening day price. Volume is 700,000 shares or greater. 1,000 trades or greater. The float is 300,000 or greater. And then on the scan, once the scan is finished, I open the chart, look for patterns I like, and place them on my watch list, right? So I'm looking for stocks that are holding their highs. So this is stocks to trade. And what I'm gonna do is I'm gonna show you guys my scanner from last night. So this is sort of what I do, right? So I go in, and here's my scanner from last night, and I actually have previous day highlighted here. So this was like the close of last night, right? And I'm looking for the highest percentage gainer. So here's cool, right? This was the stock that finished with the highest percentage, and it had 19,000 trades, 6 million volume. So what I do is I look at the chart, right? So I double click, and let me just go into the chart. I actually have it open, right? And then what you're gonna see is that this stock normally has trades 422,000. I'm sorry, 170,000 shares, right? Barely's ever traded, right? But yesterday, right, and over the last couple of days, it traded over 6 million shares, right? So it's unusually high, right? And what you want to do is you say, okay, these stocks, they're all dog shit companies, right? We know that they're not going to continue to run. They're going to give back these gains. And what you want to do is short into the gains. So what you do is this. You look at the chart, right? And what you want to do is you want to look at, so I go, let's say I'll look at the last, 10 days or whatever. Maybe I'll pull up the last month. And I'll put up the daily chart. And then what I'm looking for is consistency to see generally what this trades at, right? So this is starting back from November, right? Let me go back. From this says what? December 1st, right? This was trading at like it opened at 312, it had a high of 319, it had a low of 296. And you see it kind of like gap down a little bit, right? This is the next day. It opened at 319, it hit a high of 319, and it closed at 299. And you notice that generally this stock trades, and you see like each day after that kind of finished closing a little lower and a little lower, and this closed at 277, and here kind of kind of stood around the same range, 274, 278, 277, and then it kind of dropped, closed at 255, and then it closed here at like 250, and it closed at 252, and then it started running, right? So you notice here it gapped up, and on this day it really gapped up, right? So it closed at 374. This is not the average price for this stock, right? And if you want, you can go even back like a year. Sometimes I'll go back a year and I look from this is going a year back. The highest this stock has ever been was $5. It hit a high of 698. All right, it closed at 548. This stock is a dog shit company. All right, look, it's been as low as 194. All right, so what does that tell you? That when a stock is ripping for a couple of days, 3 green days, usually after the 3rd green day, it's gonna sell off. And look what happened. Cool, today, look where it's at. So if I go to today's chart, and I'll open it on Thinkorswim, but you notice that on pre-market, this stock went from the pattern that I talked about, right? Let's go here. Let me just pull it up just to remind you guys, just so you guys can see what I mean. Where is it? Where's my slide? Oh, here it is. It went from red to green. So, right, it went from red to green, meaning it broke. This line represents the previous day's close, and this was your entry. Now, I don't always recommend trading pre-market, and I try to make this actual trade, and I couldn't find shares. And that's a whole nother topic we'll have about short selling. That's the problem with short selling. It's kind of hard to find shares to short, especially for these lower price stocks. But this was my entry right here, 374, and look what happened. It just collapsed all day. It's trading at 340. All right. So your entry is the previous day's close price. Once it breaks below it, you could use that as a stop loss, and you just watch it collapse. All right. Now, if I go into my Thinkorswim account just to show you guys, I'll show you guys these indicators that I'm using. If you notice, right, this was over the 2 days. So yesterday it went from 282, went a high of 484. It kind of sold off, and it gapped up, and now it's selling off. So let me look at this 1 day. I'll just do the 1 day 5 minute chart. So here it is. So if you notice, right, this is pre-market, and this is 3. And again, what was the previous day's close price? It was 374. So what you could do is you can put like what's called, because unfortunately Thinkorswim, and not that I'm aware of, it doesn't tell you like the previous day's close. Well, it does, but you can't put like, it doesn't draw a line for you. You have to like kind of do it manually. So I go to price level and I find out what the previous day's close price is, and I just put, and I do like this right here. So I know that this was the previous day's close, and once it broke below that, that's my entry, and you short the stock, and look at the indicators. Look at the MAC 2D. All right, look at the lines. This is a very bearish sign. So once the green goes over the red, this is a very bearish sign, and and you just write it down. Okay, write it down. Now this is a new indicator I use. I use this what's called TTM squeeze. It's sort of like the same thing as the MACD. So the way I did it was, if I show you guys, you just come into your current indicator and just type TTM, and you're gonna see something called TTM squeeze. So you just add it. All right, I already have it here. That's why I can't add it. But you just type TTM, go to TTM squeeze. It'll appear in your lower, and just hit apply, and then it's there. All right. And what this basically means is whenever you see the candle going like this, like this light blue, that means that it's a squeeze play. That means the stock is gapping up. And when you see it dark blue, it's starting to gap down. And then when you see it red, that means it's like selling off fast, hard. And if you notice here, and then the yellow means it's still like down, but it's starting, the trend is starting to change. Okay, and if you notice, if you follow the stock, sort of that's what it's been doing. It's been below the exponential moving averages and VWAP all day. The parabolic SLR is above the candle. So these are all bearish signs. Okay, and that's pretty much the strategy. You just look for these stocks. So if I'm running my watch list, right, and I'm looking for stocks that are holding their highs. So this was another stock, MDSY, yesterday. It closed 25% change. This chart is shitty. It didn't really hold its highs, and I wouldn't really look at it. So, you just keep going through the actual stocks, right? So I go back, and then I look, and I go to, there's another one, BCBA, right? And I open it up, 22% gain yesterday, right? This is a stock that yesterday kind of hit a high of 124, and here, let me put the 5 minutes, so make it easier for you guys to see. And it went from 88 cents all the way to a high of like 128, and then it kind of went a low of 103. Now, and you see today it's kind of sideways, hasn't been doing anything. But what I would do is you just keep looking for stocks highs. So we just close these out, make it easier. This is the stock I'm going to talk about next, AMD. So again, and then you go here, you look at MDEV. Let's see, show existing tab, and let's see the last 2 days. Let's do 5 days, and then 2 days. Oops, 2 days. Yeah, this is a stock that held its highs. All right, so a stock is gonna do one or two things, right? It's either gonna give them back or continue going. So so what I would have done, right, and obviously this is today, but in hindsight, what I would done is look at the stock, right, and see what it's done over the last 10 days, and you see that this stock has been gapping up. This was at 36 cents, wow, and now it's currently at 122, right? It's hit a high of 150 this day. This was on the 27th. It actually hit a high of 150, closed at 133. But look what it did the following day. It opened at 138, closed at 94 cents. It gave it back. So what you would have done is, let's say you were watching it here and it closed at 133. Your entry would have been anything below 133. Look, it opened at 138, it hit a high of 144, and then it closed below that. That's your short entry. And you see, kind of gave it back, and now it's running a little bit. But if I'm watching the stock, and let me go to today, let me do the 5 minute real quick. Oops, it's just running sideways. You know what's gonna happen to this stock? Because it's a dog shit company. Eventually, it's gonna give back all its gains. So if you're looking to potentially short the stock, what you're looking is to see if it breaks below 115. If it breaks below 115, that's your entry. You know, and what you do is you create an alert. So like, you know, you can right click on this and you can set the alert in Thinkorswim. If I put in all right, what you can do is you have the ability to create an alert. So if you're looking to see if the stock is going to dip below yesterday's previous close price, you right click and you put you click create alert. And then you can put a mark where it'll tell you when you want to short it. And the previous day's close price of yesterday was 115, right? So what actually it shows 16. It says 116.07 was the yesterday's close. That is what I would do and set the alarm. I would say, you know, NDV mark last is at or below 116.07, and then you hit create, and then what happens is this thing will alert you even on your phone. Like if you have it on your phone, like once it breaks that, and that's your trigger to get in, you know. And obviously you're gonna be looking at the indicators. You should see how the green line is crossing over, and this is a bearish sign. And if you see, let me just zoom in here to make it easier for you guys. You see, look, this is where it went bearish, and you see how it's stepping down. It's stepping down here, all bearish signs, okay, all the indicators. And what I have here is I have that's the 5 minute chart, but generally I would be watching the 1 minute, and this is the 3 minute chart, just to get a sense of like what it's doing, because you know, like the 3 minute chart gives you a clear indicator of things, but you know, you use the 1 minute chart because the volatility of the stocks are very, very quick. Now let's talk about the other stock I actually traded today, which was AMD. Matter of fact, I'll just pull it up here. And you see, this is what happened. The reason why, right? So the reason why I looked at AMD's because AMD's been running for like the last couple of weeks, and these stocks can't just keep running, right? They got to give back those gains. So here I'm putting up the 1 year chart. I mean, this stock back in January was trading at $1.75. Now it's at $12, right? So if I go here and I zoom in, this is like the last 10 days. So you see, if you notice, this had 1 day it was green and it kind of sold off a little, then had a green day, sold off, green day, sold off, 1, 2 green days, sold off, 1, 2 green days, sold off a little, 1, 2 green days, sold off, one green day, and now it's selling off again. Because these stocks eventually got to give back their gains. And if you look at the yearly chart, look at the MACD. It's crossing over. This is going to be a good short, maybe for the next couple of days. I expect this Monday to give back more gains. This will probably continue to sell off. Okay? And because I knew that, I actually, before the market opened, I was anticipating a sell-off today. And that's been my strategy. Looking for stocks that are overextended, that you know are not going to continue to run forever. They got to give it back, right? And if you look at today's chart, so here's the 1 minute chart, right? This already started selling off pre-market, right? And what happened was the market opened, and you're going to see how in that 1 minute candle, it opened at 1170, it hit a high of 1178, but it closed at 1165. These candle wicks. These are like when the body's like this, it means that it's indecisive. The stock doesn't know what it wants to do. So you notice it kind of, what it did was in the next two candles, it kind of ran parallel. So I said if it breaks below this, I'm gonna short it, and it broke below it. And then my real confirmation for if you want to be real safe is once it broke below the previous day's close price, that's your real entry. I just knew that because it was like indecisive, and there was a lot of sellers on the ask and not a lot of buyers. I knew that I could get in, and I got it. And because when stocks are like more than $10, they're easier to get filled. Like TD Ameritrade, E-Trade will have those shares. It's when stocks are like, like $5 or below, it's very hard to get shares. You need a broker like Speed Trader or the big granddaddy Centerpoint Securities. And I'll talk about that in a couple of minutes. But if you notice, look at the indicators. The indicators were here. MACD rolled over. All right. You see the volume, the selling pressure here. You see how it's stepping down. You see how it's getting very, very bearish. Okay. And that's how you know, and that's your entry. Okay. So you could kind of like plan these out. You could kind of watch these stocks over a couple of days and then see, okay, if a stock is running 2, 3, 4 days in a row, I'm going to eventually look to short. So like, let's look at a couple of others like FBIO. Let's look at what FBIO did today. It was up 20% yesterday. FBIO. Look what FBIO did. It actually started selling off a couple of days ago. So let's go, let me look at the 1 month for FBIO. And I'm going to do 1 month, 1 day. So look what happened with FBIO. FBIO generally trades at somewhere in the 230 range, right? And then it kind of sold off, and then it got below $1, and then it started gapping up. So look, it went from like $2, and it's gapped up all the way to $3. You know what's going to happen, guys? It's going to give some of that back, all right? So what happens is, right, it gave it back. So these are stocks that you watch, and you say, wait a minute, this stock closed at, it hit a high 321, closed at 277. I'm going to look to see, and it's trading with unusually high volume. This is a stock that normally trades at 96,000 shares, okay? And it traded yesterday at 7 million shares. Hell no, it's going to give a lot of that back. So you watch the stock, okay? You watch the stock, and here I'll put and let's say I go to today. And you see, look, pre-market, okay? This was the previous day's close price. The stock opened, it gapped up quickly. It went up, and then look, it touched it for a second, and look, that previous day's close price serves as resistance. Okay? And look, and then it sold off. And you could do, that's why people love short selling, all right? Cameron Foods, Tim Grittani, Modern Rock, all these guys on Twitter. Let me go, see if I go to, all right, these guys here on Twitter, these are the guys I follow. Let me go up here. These guys, mostly what they do is short. Let me go. Ross Cameron, he's another guy. He just mostly buy. He doesn't do a lot of shorting. But a lot of these other people here, let me see. Let me just search for him. This guy I highly recommend. Yes, this guy I follow. All this guy does is short. And look, he has this funny thing, this pattern, which I'm going to talk about next, which I talk about as well. He calls it the FU pattern. It's when a stock gaps up really quickly and he shorts into the sell-off. Okay? And look, this guy, all he does is mostly short stocks. This guy makes like millions of dollars a year shorting stock. Look, favorite pattern, look, stock gapped up, shorted into the sell-off. I mean, to the sell-off. Let's talk about that. There's a stock today that is a perfect example, VBIO. This is so what I've been showing you is like stocks that you can anticipate, right? To short into, like the following day, but what about same day? So let's say you're watching a stock, right? And a lot of times this is what happens. People, right? And I told you that there's two types of patterns that I usually look to buy. And there's two types, right? Two types of momentum patterns, right? So I look at the 1 minute chart and I look for bull flags. So it's when a stock gaps up and when it's way out in front of the actual moving averages, the indicators, you wait for it to pull back towards the indicators, and that's your entry. And then it usually has another run, then another pullback, then one last run, and then right here, this is where it sells off. And this is where you would short. And this is what a lot of day traders do, because generally, like, you miss all this, and sometimes people come and they start buying way high, and then they get trapped, and then they lose money because they're buying high. Well, what I like to do, and this is what I think I'm going to be adopting for 2017, is VBI is a perfect example of that. Look what happened today. So today, right, it starts gapping, right? It starts ripping at the open. And it pulls up, and then look, it's way out in front of the actual moving averages, right? And then it kind of like, it pulls back, and then you get some buying pressure, right? And it drives the price of the stock up, and then it sort of pulls back, and then you get that one last push, and look what happens. Once it hits that, it crosses over. The MACD is already starting to cross over, and you see all the indicators, and you short into this. So right when it's topping out, this is where you want to start shorting, because once you know the RSI is here, you know, it's going to pull back. And these stocks do this again and again and again and again. And this is what these short sellers do. They short into the sell-off, all right, and get a piece of it, okay? Now, if what happens is the sell-offs happen fast, so let's say you're watching the stock and you're trying to execute your trade, okay? What you want to make sure is like, so you can get executed. I have this thing where I have these you can create what's called, and I've only done it with the buy. I haven't done it with the sell yet. But you can create these like custom triggers where, and when I put it, it automatically pulls in my price and my stop. So I have my stop set 5 cents below the actual price. This is for buying. Well, selling it would be the opposite, but I mean, shorting would be the opposite. But you can create sort of like triggers where it automatically will have the prices set the way you want them. Now, because the sell-offs happen so fast, it's like, let's say you're looking at this and you're trying to break in, right? And it's starting to sell off, and you see right here, this was the high was at 284, and it closed on this 1 minute candle 276, and you see it. So let's say it's currently at 280. You should put your short, your sell, like maybe 2 cents below it. So if it's at 280, you should put it for like 278, 277, and that way you get executed, so you don't miss your entry, okay? Because you're shorting the stock because you think the price of the stock is going to go down, so you're borrowing shares here and you're covering here, all right? And with AMD, that's what I did, all right? And just so you, let me see if I can pull this up just so you can see it, all right? So here, right, sell short is where you borrow, right? So let's say I saw this trigger and I would have got, let's say I got executed at 280, I would have watched this go down, and as soon as I see it start gapping back up, I'm selling. So I would have watched it go all the way down here to about 240. This thing went all the way as far down as 243, and let's say 240 or 250, I would have covered, and I would have made 30 cents in a matter of a couple of minutes. Okay, so when you're ready to close your position, you buy the cover because you're actually now paying for that stock. You borrowed the shares at one price, and you're actually purchasing them at the other price. That's what shorting is, and it's so much safer than going long, I think. You know, the problem is having those shares available. And let me show you guys. Let me go in. So you have a couple of traders that you could do. First one is interactive brokers. So interactive brokers is good for shorting, but you need a minimum to open an account with interactive brokers. You need a minimum, I think, of 10. I think you need to open 10,000. You need to open so the minimum account is 10,000. So you need to have $10,000 if you want to open an account with them. All right, and they're pretty good, and their fees are low, and they have shares to short, but they're not great. All right. Now the next one up, the second best. All right. I mean this is like 3. So if I'm doing my top 3, this would be rated 3. The second best would be Speed Trader. Speed Trader is another brokerage that you can do, and they got Speed Trader Pro. They're both, and they're low cost, and they're really good about a lot of the big traders use this, and they're $4.49 a trade, and they have a lot of things. But I think the prices, you gotta have a minimum of 30 grand to open an account with them. Let's see, information. Where is it? About us, features, trading platform, prices. I know it. Yeah, you need a minimum, I think, of $30,000 to actually open an account with them. Okay. All right. And then the granddaddy, and they're good. This is good. If you can get this is good. This is good too. But the best one, the one that I'm shooting for, and this is the actual platform that all the big dogs use. And because you don't, no matter what type of shitty company, no matter the price, they'll find you shares. It's Centerpoint. Now the problem with Centerpoint is that they're very expensive. All right, to open an account with Centerpoint, you need a minimum of where is it? Yeah, you gotta pay for their platform. It's expensive, but if you make a certain amount of trades a month, it's free, like E-Trade and all the others. But open an account, it'll tell you. To open an account, you need 50 G's. That's the downside. You need 50 G's. So to open an account with them, you need $50,000. But they will find shares all day. And remember, these companies are great to short. Remember, if you're trading small caps, these companies are dog shit, man. They're all gonna give back their gains. All right. So if they're ripping, okay. Like let's look at another company. I don't know. Let's look at CETX. All right. Look, this is the last 10 days. It's been ripping. This stock went from $4 to $7, right? It's had 3 green days, then 1 red day. This is a second green day, right? If you look at today's chart, look what happened. The market opened, okay? And let's say you're adopting my strategy to placing a trade when it goes from green to red. So look what happened. It opened up. And it kind of like sold off, and then it consolidated, and then it broke down, and then right here, if you notice, it went right below. So the previous day's close price was 702. That was your entry. It went from 702 to 684, and then it kind of like bounced back, and then it broke above 7 again, and then it kind of cracked it, and it went all the way down to about 670. All right, and that's an opportunity to make some money. All right, now they don't always just collapse. Like this is kind of bouncing back, but the strategy is not 100%, but it works a lot of the time. Okay, and remember, you're trying to get a small piece, 10 cents, 20 cents. Don't be greedy. 10% on your money is fantastic. All right, so don't be greedy. But most times, eventually, like this company will collapse like every other dog shit company. All right, this was my watch list for today. All the stocks are up. I mean, the watch list has been pretty good so far. Okay. A lot of these stocks have gapped up. All right, and that's pretty much it. That's what short selling is, guys. It's that simple. So again, just to summarize, all right, we go through our watch list every night, right? We have our criteria set again, and if you think of swim, I'll do it here just so I can show you. So again, I'm looking for stocks that are anywhere between 30 cents and $30. You can make your own criteria however you want. You can make it up to $200, whatever. Volume of 700,000 shares, no max, that are up 7% or more. And then when I run the scan, okay, I'm looking for stocks that are holding their highs. So at the end of today, right, I'm gonna go through these charts and I'm gonna look for the stocks that are actually holding their highs. So that actual scan is right here. I have it here on the side. And if you look, right, like IMGN, it's holding, look, it's been ripping, it's holding its highs, okay? It's actually gapping up all day. And it may sell off at the end, it may hold its highs, but guess what I'm gonna do if this holds its highs? I'm gonna look to see what this stock has done, right, over the last, week, 2 weeks. And if you notice, it's been selling off like crazy. It's gapped up. It actually was at 150 here, and it ripped for 4 days in a row, and it got to a high of 224. This is a company, it's a shitty company, all right? And it kind of gapped down, and then it had 2-day run and it gapped down. So what do you think I'm going to be doing Monday? If this holds its highs, I'm going to be looking to see this stock, to see if it dips below the today's close price, and if it does, I'm going to see if I can find shares and try to short it. That's all I do. And then I'm looking for a piece. It's that simple, guys. That's all it is. That's all I'm doing. Okay? I go and I look at these stocks, and let's just go here. And I just look, and these are all the big percentage gainers so far today. And you see, this stock actually ran for 420s at 480, and DEV went for 129s, rolled sideways. This will probably collapse. And nothing's crazy. Market's kind of dry. It's kind of dead right now. It's giving back a lot of its gains. It's not. These charts are ugly. All right. But that's all I do, guys. I'm just looking for stocks that are holding their highs. Okay. To look to short or go long. If the market opens and it's ripping, then I'm gonna put a buy order. And I'm now using a two candle gap scan. So I showed everyone in my momentum video that I was using the 3 candle, but I implemented the 2 candle, and all I did was change the price direction. The closes increased over the last 2 consecutive bars, and you can do this in reverse. You can create like a candle gap scan for shorting too. All right, but and all I did was, the reason why I put it to 2 candles, just so I can find plays quicker at the market open. That's all. So like these stocks are currently the ones that have 2 green consecutive candles that are gapping in. And what I do is when the market opens, I just kind of just click through them and look to see if there's any potential plays. So I'm going here and I'm just literally clicking. This got no volume. This is a shitty stock. And you see the volume. I want stocks with volume. All right, look at this. This has been just selling off, and it's having a little bounce play. So when a stock sells off, it's just collapsing. It's under all the moving averages and indicators. So it's just gapping up. So that's why it popped up, because it closed 2 candles went green, and it's just continuing to sell off. Shitty companies. DRAM, look at this. Look at DRM. This is a company that was ripping a few days ago, and it's just been giving back all its gains. It's kind of sold off, and it gapped up, and it's just been selling off. Okay, but in the market open, this is kind of cool because you get a sense of, like, you could find a lot of plays. Like, you just click in right in between the starts. When the market opens, you can kind of quickly look to see the percentage gainers, and you look at this. This is like a strength meter. It's telling you that the stock is going up, and you just look for those kind of stocks, and then you just click on it and you see what it does. So like, for example, when the market opened, this stock would have appeared right at the close of this indicator on my candle scan, and I would have been watching this, and I might have placed a buy order because the MACD was rolling over. The squeeze, remember, this light blue means that it's a pop, that it's squeezing up, that it's going to be bullish. And you see how it's bullish, all the bullish signs. It's below the RSI is below 70, and you see it gapped up, right? And then it kind of consolidated, pulled back to the 90 MA, and that's when it got a little push, volume push. This is where when people saw the stock here, they're like, wait a minute, I'm not chasing, I'm going to wait for a pullback. And what happens? It pulled back, it ripped up again, pulled back, and then look what happened. Right here, this is the reversal, and this is where I would have shorted. Just like I showed you guys in the momentum play. 2, sell off. Guys, I'm telling you, man, you could do this all day. So if you're thinking like, I'm just looking to short, and you seeing this, and you're like, you know what? I'm not going to even wait. I'm just going to wait to see, give it back, because most times you get most momentum plays is a stock will have two rips and then the sell off. And look, it went from 750, and you see it's starting to roll over here. Everything's stepping down, and you see it's going below. And look, it went from 750 all the way down to right now it's holy shit, it's at 690. He could have made almost 50 cents shorting it, going the other way. And then so you know this is what I'm looking to do. This is the strategy that I want to adopt in 2017 with a Centerpoint securities account. Right now my money's tied up in a lot of things, so I gotta free up some cash to put it in his account, and I'll let you guys know when I open it, and I'll let you guys know how I'm doing with it. But all the big traders use this, and that's what they do. They short. You know, the problem is again is that you know anybody can buy a stock into a company, right? Buy and sell. That's not a problem. It's shorting is a problem because your broker has to have shares available for you to borrow. Interactive brokers is good, but it's like first come first serve, and they have a limited amount of shares. TD Ameritrade will have shares, but you know they're gonna have shares for companies that are like $10 and up, like these low price companies. Like it may have a harder time doing it, you know, finding shares to short. All right, so that's really what I wanted to talk about today. All right, if you have any questions, just hit me up on Facebook. I hope you found this informative. I hope this made sense. Oh, and if you're wondering what my what my like my ratio, so I don't really use ratios and all that. I just look at, I don't want to lose more than a couple $100. So if I'm down a few $100, you know, I close my position. That's kind of how I sort of trade. So let's say I was watching this and I see it. I'm like, all right, it had its, you know, its bull run, right? So it gapped up. It had its first pullback here, gapped up. It had its second pullback here, and then you know it's the last push before the sell-off, right? So I'm looking to short it somewhere here, and I see the MACD rolling over. So I try to get executed. So let's say I get executed somewhere over here. Let's say I got executed, you know, like right here, like let's say it's 740. All right, say this guy's here. So what I'm doing is I'm probably using the high as, you know, as my stop loss. Whatever the high was, my stop will be my stop loss. Either that or you know, $200 or $300 or whatever it is. The max amount of money I want to lose. I don't really focus on percentage. I focus on like, okay, if I'm down more than $100, if I'm down more than $500, that's it. I'm out. You know, that's sort of how you do it. Now, you could say, well, Omar, well, if you know that these companies are all dog shit, they're all going to break down. Why don't you just hold the shares and just wait for the collapse? You can do that, but and most brokers will allow you to hold the shares for 3 days, but you know, it really all depends. And you, since you're borrowing shares, you got to pay interest on those shares, and depending on your brokerage, they may charge you per share. So you gotta like weigh all that into your determining factor. Well, TD Ameritrade doesn't, but if you go with one of the bigger traders like Speed Trade or Centerpoint, yeah, they're gonna charge you. So those are the things you also gotta consider as well. So you know, if you have more questions, I know shorting is, you know, somewhat complex for people. I would just go into, this is what I do. I just go here, what does shorting stock mean? And I Google it. Borrow shares. To profit from a decrease in the price of a stock, a short seller borrows the shares and sells them, expecting that it will be cheaper to buy back in the future. The borrower is not notified the shares are loaned to the short seller, but this action does not impede the owner from selling at any time. There you go. Or you go to Investopedia and just read, guys. Just read. And just read the stuff here. All right? And you need a margin account to short. And, you know, call your broker, and, you know, they can, you know, kind of like, you know, give you some info. Click videos and just watch videos. This is how I learned, guys. This is how I learned. I did not pay for no classes. I didn't pay no guru to teach me. Just go to YouTube and learn, and you can figure all this out. But you got to study. You know, you can't just be bullshitting. And just find me on. You know, I hate social media, but it is good to have in the sense that you can see what other people are doing. I'm on Twitter. My handle is Watch Old Trade. All right, and just go to see who I'm following, and you know, just look. I follow a lot of other traders, and you know, you'll see a lot of other traders here. So not everybody here only is a trader, but most people I follow on here are traders. and you just get a sense of what other people are doing. You can kind of watch, and a lot of times they alert you. You know, you kind of what's moving and stuff. All right, so you get a sense. So it's just something to think about. All right, folks. So hope you found this helpful and useful. And if you have any questions, just hit me up on Facebook. All right. Have a happy New Year. All right. See